and good day. This is the Eye of the Storm podcast with the weekly update for the NASDAQ 100 being recorded on Saturday, June 15th, 2024. I am going to start here on the cash market, the NDX, and do a quick review of the big picture. Just to recap last week, it basically just showed that the upside or the rally continued. But I still believe that we are in the finishing legs. We are getting closer to that finish line, but just for the minor third wave. So I'm still looking for a minor fourth wave to begin. And let's go into some of the detail. And let's just take a look at that larger picture starting here on the weekly chart. So nothing really is changing except the internal count, which is happening up inside minute wave 5, which began here and off of the April lows. And so that's what we're working on, is that minute fifth wave, and we're inside of the minuet fifth wave of minor wave 5, and likely within sub-minuet wave 5 of minuet wave 5 of minute wave 5 of minor wave 3. So in my opinion, we're getting very close to that finish line for minor wave 3. So starting back, the largest picture I got is that we're in a primary degree fifth wave up. And within that primary degree, we have finished intermediate waves 1 and 2. So we remain within intermediate wave 3, which will consist of 5 waves of minor degree. And we've done 1 and 2, and minor wave 3 has been exemplary and is an example of the potential power that's going to be consistent within a third wave. And within this third wave, it is subdividing into its own 5 waves of minute degree, of which we have minute 1, 2, 3, and 4. And so we're inside that minute wave 5. Now, the alternate count to all of this would be that we're still inside minute wave 3. I don't particularly see that, but that would be the alternate if this thing just continues to subdivide and move higher. So either way, I do believe we are coming in towards a corrective process. Now, whether this market gets itself up to closer to 20,000 and still does it inside the minor third wave, so inside the minute third wave, then we'd be looking for correction still back, but still it would fall within here. I'll go over that in just a second. So being that my count still reflects that we're getting close to completing the minor third wave, the expectation once it's complete is that it's going to drop back to the fourth wave of 1 lesser degree, and that remains right into this area. And so that would be where I would expect minor wave 4 to find its terminus, its endpoint within the price territory of minute wave 4. And then still, once complete on a minor degree, we have a minor degree wave 5, again, up, out, and over to new all-time highs, again. And then that would then complete intermediate wave 3, which we have then a little bit larger fourth wave correction. So depending on how high it gets, again, we're now looking at over 20,000, because at the end of next week, the contract will switch from the June contract to the September contract. So June is getting ready to expire. Next Friday, the 21st of June, is the monthly expiration. And also then the week after will be the quarterly expiration. So we have 2 large dates on expiration cycles. That June 21st expiration is promising to be quite large. And it's very, very, very heavily call weighted right now. And that's in the Qs, in the NDX, in the NQ, across the board in all of the ETFs, heavily weighted on the call side. That all gets to expire on the 21st. So in essence, if we're looking for this top to be put in, could we carry through the week? We could. Now, mind you, that here in the United States, on Wednesday, June the 19th, it is a federal holiday, Juneteenth. It is been on the books now for several years. It is a federal holiday, so the U.S. markets on their regular session will be closed on Wednesday the 19th. So that leaves us basically Monday, Tuesday, Thursday, Friday to wrap up and process this entire large June expiration. So could it get up there? It could. Now, also because the expiration, that the markets are closed on Wednesday, the volatility expiration has been shifted to Tuesday. So we got a couple of things coming in early here. So volatility will also expire on Tuesday instead of Wednesday. That, as we know, releases a lot of activity into the market just because all those volatility positions come off. And so we're going to see things start to get kind of heated up as we work our way towards that Friday expiration point. Now, let's start breaking this down so we can take a look as to where are we inside of all this. So this is the weekly chart, again, inside of minute wave 4, going up. And then inside of that, we're inside of minuet wave 5. So we're in minute wave 5 and then minuet wave 5. So let's bring it down right to the 4-hour chart and let's take a look inside. So there's minute 3, minute 4. Let's open this up. Now we can take a look at what we got going on inside. So within minute wave 5, it's going to have 5 waves of minuet degree. I labeled as such. So we have 1, 2, 3, and 4. And so we're inside minuet wave 5. Now we've already labeled up for the Fibonacci for minuet wave 5 as it relates to minuet wave 1. You can tell that, okay, that's been exceeded and that happened between our weeks. So I'm going to go in and we get to take that out. So that is no longer active. We take that out, and that leaves our next level on a minuet degree for a fib level that would be 2.618, and that comes in at 19,969, so 970. Now, considering that the market closed the week at, let me just see, we're right there. It closed the week at 19,607 after reaching a high at 19,664. So it's a good 300 points all the way up to 2.618. But as I've talked about consistently, it is going to be the structure. So we're now looking inside of this minuet wave 5 potential all the way up here. But now let's see what happens. We have sub minuet wave 1, 2, 3, and 4. It's been quite the ride, folks, quite the ride as the market extends and extends and extends. First, we had NVDA earnings. Then we had the Fed meeting. Then we had Broadcom. Apple, actually, we had Apple with their Worldwide Development Conference. And that initially did not turn out, I mean, on the day of that conference and the presentations, they sold off Apple. The very next day, as things sunk in as to Apple's movement into artificial intelligence and how that's being integrated within Apple products, brought out some extremely, extremely strong buying. And it was quite evident because I believe that was on a Wednesday was their conference, and on the Thursday, I believe it was, if not, then I'm a day off. But on that day after that conference, Apple broke above 200 and just then sparked. And we saw, I think it was over 167 million shares of stock trade on that day after. So re-engaging with building up positions in Apple as it announced what it's going to be doing in terms of artificial intelligence. So then we had Broadcom's earnings, I believe, on Thursday and after the market, and the stock rose 189 points on the earnings, and then continued to move higher on Friday, as Friday being an expiration. So we had Apple positions coming off. We had Broadcom all the way down the line. Everybody had positions coming off. Now, mind you, add into this that post-split, NVIDIA managed to boost itself up and now has been moving 2 days in a row. So we had Thursday, Friday, moving to new, actually might have been Wednesday, Thursday, and Friday, into new all-time highs. Post-split, but still all-time highs above $130 a share. but pre-split, that would be 1,300. So again, some power in the NASDAQ as positions get adjusted, preparing for not only the Friday expiration that's already gone, that's already happened, but now we got this next week coming in as well. So it's going to be big. It's a big expiration again for the Qs, for the NQ options, and for the NDX options, plus all the other consistent ETFs that go along with it, the SQs to TQs. And then what we have in terms of NVIDIA, and then we have NVIDIA ultra shorts and NVIDIA ultra longs. I mean, there's so many different things, products now that all get tied into these underlying, like NVIDIA, Apple, etc. And then, of course, the indexes themselves. So there's a lot of activity going on as I believe that we're reaching that pinnacle to complete minor wave 3. So looking inside minute wave 5, and then minuet wave 5, we have 1, 2, 3, 4, and now we're in sub-minuet wave 5. And what does that project out to? Well, what we have initially, if it's going to come in where sub-minuet wave 5 is going to be equal to sub-minuet wave 1, then that is 19,991. This is the cash, folks. This is the cash. So could we see next week a continued rally? Yes, we could. Now, in terms of what may be coming out economically next week, I don't believe that it's going to be very big. Let me just take a pre-look at that, and let's just see what we come up with. And so, hold on one second while I get that set up for us. And I'm going to take a look at what we got coming out next week. And that's going to be, wait 1 second. I'm not getting it right. I keep going to the wrong website. Please forgive me. And so we go down there, and then we're going to go take a look at our economic calendar. Here we go. So this coming up on Monday, we have the Empire State Manufacturing and a couple of Fed governors and a Fed president out speaking. On Tuesday, U.S. retail sales, industrial production and capacity utilization, business inventories, and then a host of Fed going out. On Wednesday, actually, they will be releasing Home Builder Confidence Index at 10 a.m., even though the markets are closed. And then on Thursday, initial jobless claims, current account, housing starts, building permits, and the Philly Fed manufacturing all come out first thing in the morning at 8:30 a.m. And then on Friday, we're back to the PMI. So we have a lot of the Philly Fed PMI, the S&P Flash U.S. Services PMI, U.S. Manufacturing PMI, existing home sales, and then on Friday the 21st, U.S. leading economic indicators, as well as a very large expiration. So not that heavy duty as we saw this past week, but still some decent data that the market will need to react to. So could the market kind of move its way all the way up there? Yes. What would be second on a level? Well, let's just kind of start from where we are. We have the minor degree third wave, or that minor third. It now projects on a 3.618 or 3.618 level, brings it up to 19,690. And again, that's not too far from where we closed. So I would think that that might be broken. And again, let me just reiterate, what we look at from there is the structure, not necessarily the next level going up, because that next level would be 4.236, and that's 21,000. Now, could the market get up there? Boy, something really's got to rock the boat to get it up that high next week. So eventually, well, yeah, I would think, but not in a minor third. I think we might get up there in a larger wave pattern. So what we got going on. So there's that. It should still come in as resistance, and kind of did already with this high coming in on Friday at 665. So about another 35 points or 25 points, and then we're right at that resistance. But in terms of the sub-minuet wave 5, our first line in the sand is at 19,793. This is basis, the cash. So if we got to add that into the futures market, we're going to take a look at that in just a moment. So again, here we are, 4-hour chart, pretty well in that overbought reading. Let's walk it out to the daily. We'll take a look at the daily chart. Pretty much an overbought reading. So, and again, but still all of our moving averages right now pointing up, up, and up. Even that 200. Look at the slope on the 200. Definitely reacting to the strength that the market has been showing. But now our relative strength on the daily is saying, well, you're just a little bit overbought. But remember that we had right there, folks, last week, we had that rising 3 in the NASDAQ on the daily. And that was it right there. And as sure as hell, proved to be very strong. It's a very, you could almost say bread and butter type of when it breaks and when it occurs, it's a trade. And you just take the trade, even though we were at, again, new all-time highs. You just take the trade. What happened the next day? We gapped. We gapped and we continued to move higher. It's a very reliable pattern that once it is engaged, it's the reaction. And what the market does is usually pretty steady. Okay, so we've had that. And so we're up here and we're looking for everything to continue. But you can see we're getting really pretty overbought. So if anything, we should get a pullback. And if anything, maybe back down to here. The minuet fourth wave, and that's 18,180. So from where we are, it's a pretty steep little drop to get going. But essentially, if it does complete minor 3, then this is the window we're going to be looking at. And I'm going to mark it once again, just to kind of keep it in there. So if you're going to make reference to this chart at some point in the future, then we're going to see where we are. And since it's a minor degree, that's what I color my minor degrees are in that orangey gold color. And so that's that color, saddle brown, actually, it's called. So that's the area that we'd be looking for that minor 4 to come back in and find its support and its termination, its terminal point. Okay, going over to the futures market. Quite a week, oops, wrong one. Quite the week in the futures market as well. And I have to say that on Thursday and Friday, boy, we had corrections begin, or at least intraday, or whatever the corrections, the size of the corrections. In the Dow, in the S&P, in the Russell, we saw corrections. The NASDAQ continued to power higher. And how long that could actually stay disjointed or out of sync with each other, it's all due to the movement that we got in Apple on Friday, Google, Meta, Microsoft, Broadcom, and even Tesla. So once those kind of can click and realize up top and start to sell, and the rest of the market sell, we may play catch up in terms of downside here in the NASDAQ. Yet to be seen, but just putting it out there. So in the future, we still are also within minute wave 5, going up to complete minor wave 3. So let's take off that daily. Let's go back down. Let's take a look at the 4-hour chart. I'm going to open it up and we'll take a look inside. And actually, I just want to see this last move. This is what we're counting. So we can see that we have minuet 1 and 2, then minuet 3, which ended right there, subdivides into sub minuet 1, 2, 3, 4, and then the 5 to finish minuet wave 3. And then we had minuet wave 4. And again, when you try to compare it, you're like, wow, this and this just don't match up. But it counts best as is. I know it's difficult, but this was the extension. This was the extended third wave. And granted, that fourth wave is pretty big. And I probably could just lower that, put it back there, put the 4 back here. But it counts best. And then this would be 1, 2, and then we'd be 1, 2, 3, 4, 5, 3, and still in a 4 and a 5. It's a coin toss. Right now, I'm not necessarily looking in that direction. I'm kind of leaving this as is because of the breaks here. 1, 2, 3, 4, both kind of, larger than we'd expect. But I may move it back because of that. And that would just be in the futures market. Pretty satisfied how I got it over there in the cash. So once again, I'm leaving that open again. And what it would change is that I put this 1 here to 4. And that's really going to change how this all balances out. Now, if I open this, I'll bring it down to the hourly chart. and we just take a look at the inside here, like right from here, and this is what we're interested in. Now, again, if this is going to be, this is all the third wave, then this is 1, 2, 3, 4, 4, and then we're just in 5, and we're just finishing 5 of 3 here. And we got so much more, and then really, what are we looking at? We're looking at 20,000 and above. So that's, I know that I might be able to say that I should do it now, you know, and that would be moving this 3 down to here, the 4 down to there. And then this is 1, and this is 2, and then 1, 2, 3, 4, 5 of 3, 4, 5 of 5. And that actually, and now that I keep thinking about it, I'm likely going to do that. And so this is going to change up just a little bit here. That this 4 is going to activate. I'm going to bring it back down to this level, down here. And then what happens is I got to go in there, and I got to look at 2.618 because these two no longer matter, and add the 3.618 and see what all that looks like going up. So what happens now? 2.618, 20,000. So we're way up there. Now, again, if I'm putting this 3, I'm going to do it real quick, folks. So just bear with me. See, it just doesn't count well. It just doesn't count well. I'm going to go 1, 2, because I can't say 1, 2, 3, 4. That overlaps. So it's got to be 1, 2, 1, 2, 3, 4, 5 of 3, 4, and then we're inside that 5 now. I know it looks weird, but I'm truly. I'm showing you my process, and also in discussing that same thing. So again, I just moved it down, but you can see it just does not count well. So I'm going to move it back. I put it back where we had it, and then we're back into, again, now I need to change my numbers. Bring back the others. We got to bring back 1.618. 3.618 is just way out there in the stratosphere. So let's take a look. 20,081. And even if I look at the 100%, let me just put that back. I think we may have exceeded that, but let me just take a look. Get out of the way. Yeah, that one is right where we are, and I think we've been above it. So let me go back and just remove that because we don't need to have all those lines in there to make things confusing. Okay, so just in terms of minuet, wave 5, it's going to be structure. So we got to break it down, and we're taking a look at this inside, and we're looking at, and let me just open this up and bring this in a little bit. And what we're looking at is we got 1, 2, 3, 4. And the 4th wave, you know, it did come back down on Friday. And so I marked the 4 over here and moved this over. So we're looking at wave 5 as it relates to wave 1. And again, because wave 1 was not that big, 1.618 brings us up into right there, and that is 19,754 would be 1.618. So again, we have 19,722 and then 19,050 to 55 or 56, I believe it is. Oh, 45 to 55, let's call it. So we got 19,722, this is in the future, and then 19,735 to, I'm going to say 45 to 55 up here. A break above all that shoves it all the way up to 19,900. Could it do it? Yeah, it could. But again, you know, we got the holiday, we got the two preceding and the 2 after, and plus that June 21st being a very, very large expiration. And I just think so much can happen there in advance of and then after it's over, or building up to that expiration on Friday. So all of this, I think, comes into play. Again, I think the main thing to start to remember here is what we're completing. So going back out to that 4-hour chart so that we can see it, what we're completing is a minute fifth wave. So first of all, a minuet fifth wave, a minute fifth wave, and a minor third wave. So I go back out to here, we pull it in, a minor third wave, finishing all the way up here. Quite the dynamic. So what will we be looking for then? Go back out to my 4-hour chart. We take a look. Is just as well, we're looking here for that same type of a move, where it comes down to the fourth wave of one lesser degree, and that's right inside here. And so I'm going to put that color back on. I know it just kind of sticks out, but it should. And remember, minor wave 4 comes down into here, and then we go back up, make another new high, finish intermediate wave 3. And then if minor wave 4 only comes down to here and it gets labeled as such, then what would we be looking for in an intermediate fourth wave? We'd be looking for it to come back down to this level. So if it gets up to 21 or 20,000, 21,000, and then it finishes that third wave, we're looking for an intermediate fourth wave, come back down to the same level, and then an intermediate fifth wave to go up yet again. So, and mind you that when we're laying out all these fibs way back when, like a month or two ago, I continued to say, I'm not really looking for 20,000 just yet. Well, now that we're going to come up, finish minor wave 3, come down to minor 4, in minor wave 5, I definitely am looking for that. In intermediate wave 5, I'm looking for even greater than that. So there's still a lot of upside to go, just telling you how far this primary fifth wave can continue to extend up into what will be considered the stratosphere. These will be quite dynamic highs, and it's going to be that September to December area that we probably start looking for the market to finish that primary fifth wave. And then I bring out that other label, the cycle third wave. So we got a lot to do before then. A lot can happen in between that could cut all of this short. We have so much geopolitically going on in our world that right now artificial intelligence is totally ignoring, or any possibility there that's what can jump in and ruin the party. So there's a lot of things still happening. We have a presidential election, which is getting stranger by the day in terms of like, oh my God, what's going on there? So that is going to have a play in our markets. It has to. It's the future. It's the next 4 years. So we've got that. We've got the argument or the non-argument about, well, when are interest rates going to start to get cut? When are they going to consider inflation truly under control and meeting their goal? I mean, we keep getting regurgitated the same information from the Fed, the same lines, actually, from the Fed president, chairman. So it's like, okay, well, when is enough is enough? When is it really going to start? And then what effect is that going to have on? What happens if any of these conflicts that are currently in place, the one that's turning even more active would be Russia and the Ukraine? What happens if Ukraine is accepted into NATO? What will that cause Vladimir Putin to do? There's geopolitical situations. And now we just found out over the weekend here that the government, the U.S. government, plus others in the Eurozone are going to start placing sanctions on China since they have been helping Russia supplies as they are at war with the Ukraine. What effect is that going to have? What happens if China starts to get more actively involved in deciding now's the time to go after Taiwan? What's that going to do? What does it do to artificial intelligence? What does it do to chip production? So there's a lot of things that are sitting out there that are not actually being factored in, that are not even affecting anything, because I think the market is still in this position of not going to matter. It's not happening right now. We're only going on right now. But these are potential things that you have to consider. It's like, well, what can propel the market higher and what could drop the market like a stone? And so those are the things. Now, neither side has actually happened because we're trying to look out into the future, and the future is not known by anybody. So we've got our fibs pointing out into the future as to where we think we can go. But seriously, folks, at this stage, I believe we need to take things day by day. So in the NASDAQ, I am going to continue to look for a continued upside through likely that June expiration, or at least up to almost the build up to it. And since Wednesday we're closed, it's either going to be happening on Tuesday or Thursday, where we start to see some activity to clean up positions, to start preparing positions, and to how the market, the larger players, the markets want to really end up on Friday. And then bouncing off of that, we've switched out to the September contract for the futures market, but yet then we have the quarterly. We have the end of the second quarter coming the next week. And then we're into the third quarter of 2024, believe it or not. So moving averages continue to really suggest we're still powering higher, although we'll start to look for some turns. We'll start to look to see what happens. And I think that once a turn does come in, since basically in the back of everybody's mind in terms of trading, we're all looking for a correction. Some are looking for a crash. I am not. I just believe we have a little bit larger degree correction, which carries the potential, now that we're pretty close to 20,000, of shedding 2,500 to 3,000 points off of the NASDAQ. Okay, this is what I'm going to conclude this right now. The next Elliott Wave daily update will be on Monday, June the 17th. Have a great balance of the weekend and see everybody on Monday.